Exports are expected to continue dropping in December because of the global economic slowdown, but the Commerce Ministry remains confident that full-year export growth should be around 7%. Commerce Minister Julin Laksanavisit said on Tuesday the anticipated drop in December would also stem from a relatively high base in December last year. Custom clear export to $24.9 billion in December 2021, a rise of 24.2% from the same month a year earlier, with import increasing by 33.4%, $25.3 billion, resulting in a trade deficit of $354 million. For the whole year of 2021, exports expanded by 17.1% to $271 billion, while imports rose by 29.8% to $268 billion, resulting in a trade surplus of $3.57 billion. With respect to the export outlook, the ministry assesses that the slowdown of the global economy and consumption will inevitably affect Thai export. The appreciation of baht coupled with geopolitical tension might also be hindrance to exports during the remaining period of the year, he said. However, the efficient management of central banks in many countries has resulted in a slowdown in inflation of commodity price. This may be a supporting factor that pushes up the purchasing power of trading partner economies. Moreover, government efforts to promote more exports through a China-Laos railway along with China reopening will be important factor driving trade growth since the beginning of 2023, he said. The Commerce Ministry reported on Tuesday that exports dropped for a second straight month in November, blaming a global economic slowdown and China lockdown measures. The custom clearance value of export contracted by 6% year-on-year in November to $22.3 billion after a 4.4% year-on-year drop in October. Import, however, increased by 5.6% to $23.6 billion, resulting in a trade deficit of $1.34 billion. Export of agricultural and agro-industrial products dropped by 2% in November from a year earlier to $3.73 billion, while shipment of industrial products declined 5.1% to $17.8 billion. For the first 11 months of 2022, exports still expanded by 7.6% to $261 billion, while import rose by 16.3% to $280 billion, resulting in a trade deficit of $15 billion. Mr. Julin said export has been affected by the slowdown in the global economy, as higher price and interest rate weighed on consumer purchasing power. Moreover, the zero-COVID measure in China affect the manufacturing sector, as reflected by the Global Purchasing Managers Index, or PMI, which was below 50 for 3 consecutive months. The contraction of export in November was lower than that of other Asian countries, such as South Korea, which saw a drop of 14% in the same month, with Taiwan down by 13.1%, China down by 9.2%, Vietnam down by 8.9%, and Singapore down by 6.3%. Nonetheless, there were positive factors, namely the continued decline in Fed rate of US and European goods and the Ministry of Commerce export stimulus strategies during the end of the year.